Welcome to another video. In today's video, we'll be going over what is a volume profile and how you can leverage this into your trade, add it as additional confluence. In today's, if you're not familiar already with the volume profile, I'll quickly go over what is a volume profile. Volume profile essentially is an analysis tool that showcase how much volume has been traded at each level. So instead of having the volume display vertically at the bottom, so you typically see volume at the bottom here by each time, by each second or minutes that you see. Instead of that, is by each level. So at each price, how much bid and ask that has been transacted over through the market, and then where you can see where is the heavy most transacted volume and also where is the low volume. And based on that, you can kind of formulate your idea and align with other confluence, whether you trade SMC, ICT, or supply demand. You can actually see the picture on why it does what it does when the price moves from point A to point B, or it reaches a certain level, and why it have a certain reaction at a certain level. Right. So this essentially just give you an idea, paint a picture on why price does what it does, and also give you higher confidence on your trading edge on what the direction that you want to trade towards. So jump into the next slide here. Before we move on to understanding and leveraging this into our trade, we need to first understand what is a volume profile and a couple of things that you can see on this chart. So here is the fixed volume profile I have drawn from point A here to point B here. Okay, so within here during this time, each level have a different volume profile. The longer the price of a bar here, obviously just mean there's more volume transacted through. The lower end just mean less volume transaction at this price, which the price did not stay at this level long time, where it doesn't go back to this level multiple times. Pass through this level very quick. Those are considered low volume nodes. And then here at the high is considered high volume nodes. Okay, now the next thing is this white line here we need to cover is the point of control. This just means this is the highest trading volume, so you can view it as this is where the market view the price as a fair market price. So there is no sell side imbalance or buy side imbalance where you can think of that. It's everyone think this is a fair price to trade. Okay, and then you have the value area. So you have this blue line here, top value area, and the low end of value area. So this is essentially 70% of all the trade occurs between the volume areas. So the point of control, these are 70% of trade that transactions through. So within these range, right, these box here, within here, these are considered fair value. Anything outside is not considered fair value. It means that there is a low volume that transacts through on outside of lower end and the higher end. This is essentially where the volume nodes of the low volume nodes will sit typically, and this is where you want to see some sort of rejection. And then within here, you will always see the price will react towards the mean value, which is the point of control. So why this matters is whenever the price, you will always see is price is always moving up, down, up, down, up, down, up, down, up, down, and then go out a little bit, and then go down a little bit, and always in the middle, right, until breakout. So here, this is essentially why price moved the way it is. In the middle part, this is the mean value area, point of control, where the price everyone deems to be fair market value. Whenever price go outside of this box, so this box here, it will always grab it towards back into the middle. And then you can see recurring, and then pull outside and then go back in to the middle. This is where the market is balanced versus imbalance. So here outside, this is imbalance, right? So you have all these imbalance outside, and then you have the balance area in the middle. So when you're looking for trade, typically when I look for trades, I want to look for my entries. The most easy trade is I want to look for my entry somewhere here, depending on my PD arrays, whether I leverage I see on a higher time frame. I want to leverage this and then targets inside. because the price will always magnet towards the fair value. That's where the price will always move. So you always want to see some sort of rejection at this imbalance area, which in this case you can see is fair value gap or whatever you call it. There you will see a imbalance outside here. It will fill this imbalance, whether it's called fair value gap or some sort a supply with demand that it get rejected or supported. Then it will move back into the supporter area, which is the balance area where everyone deemed the market price to be fair. Okay. All right, now moving to different shape of profile that you can leverage when you're trading. So we'll go over the B profile. The reason it's called a B profile is pretty straightforward, just because it's shaped like a B. And it just means majority of the, as we mentioned before, majority of the point of control and also volume area sits in this area. 70% of trading area sits below, right? And then you have low volume above. So what does this tell us? That just means that this is seller dominant. The price overall have more traded volume at the lower end. So the price will continue to accumulate at the bottom. And then once it go back up into here, it will always get pulled back down into the balance area and then continue lower, continue lower. So from here, it gives you an idea of a strategy to fade a low if supports hold. And then or you can take trades outside imbalance and then target inside to rebalance into inside the balance area, right? So if the price is up here in this area, this is imbalance area. All right, let me make this clear. Remove all this. So this is the imbalance area. So let me separate by line here. This is imbalance area. This is balance area. You can also, majority of time I like to trade is, you can see this area. I will put a limit order up here and then target back into here to some sort of equal lows or whatever. Those will be my high probability trade, right? So if you leverage volume profile and versus whatever PDA rates you have used, this gives you a clear understanding of, look for imbalance areas. Typically imbalance areas, those are the price will rebalance towards and then continue back or rejection. Okay. Now going to the next profile, which is a P profile. Right, so this is standard. So this is a P, okay, and then the profile will sits above here. So this is essentially the balance area. This is the imbalance area. Okay, so price will always come out here, move back into where the price seems to be balanced, and that just means this is a market that is strong. Of buyer is a lot stronger than the seller, which a lot of buying occur within the upper range of the quadrants. Okay, so you will look for distribution signs that fade a high if resistance hold, where you can look for imbalance and then just target back into the balance area. Okay, going to the next profile is the D-shape profile. The D-shape profile is typically, it just means a ranging day. So you can see shaped like a D, right? And then you can see how this is the balance area, and then there is not much outside, right? It's look like a perfect bell-shaped curve, and the point of control sit right in the middle, right? So typically in this day, you can expect there's no imbalance towards the sell side, there's no imbalance towards the buy side. So typically this day, either you stay out of the market because this will be a choppy day, or what you want to do is trade within the imbalance into the balance area. So whenever the price goes outside, find some sort of PD arrays and then target balance area. Same thing as P shape profile or B shape profile. Target the outside. So this is the only thing you focus outside in the extreme and target back into the balance, because this day will definitely always chop back into here, right? There won't be any trend. It will always just be back and forth on the outside. So this gives you a lot more understanding of getting fake out. So for example, if you try to, let's say, long here, right, it went back down, right? And then when you try to short here, it went back up. You will continue getting chopped around if you trade within the balance area. Don't try to trade within balance area because the price is not imbalanced, right? You don't want to you don't want to predict the markets on where the price is going. You want to let the market show its hand on where most likely the probability of the price will rebalance towards, right? Okay, now you have understanding of volume profile. Let's jump into the live chart and take a look how we can put this into our trading. Now let's take a look at a live example. So this week, on Wednesday the 24th, a lot of trader took a loss on this day with recently how anticipated strong momentum that the price has been trending upwards and always continue respect all the lows. But on this day, I will kind of go over based on just using the volume profile. Obviously that's not only PD arrays I use, but just leveraging the volume profile, it gave me strong conviction on it will be a short this day. And to me, I'm anticipating probably this will be a rebalance price before it continue moving higher. And this is how I played it out. So in the bigger time frame, we can see this is continued uptrend. There hasn't been any market structure shift. But how do I know this is the range that I want to look for shorts? And from the recent shorts, you can take a look. I literally grabbed the short at the peak with limit order. So I knew where it was placing, and I'll kind of show you where I place my limit order is not just random. It's based on wherever there's a low volume nodes, which we have covered. So first thing, this is 4 hours that we're looking at for NQ. Let me jump down through 30 minutes. So on Tuesday, the move I was looking for was actually a long around this area down here, and I did end up getting a long entry around 2 o'clock, but ended up not moving as strongly, bouncing off this price level. I have some reaction, but not how I expected when this candle came in. So let me drop down to 5 minutes even a little more. This candle, when it first came down to here, I got a strong reaction upwards, but then we chop around for pretty much all the way till close. So at the end, I just close off pretty much break even. At this case, my entry was around here, and essentially just close the day break even. But diving back into how I leverage volume profile to let me know, today I knew to short from this entry over here, literally at the top wick of this at the market open. So first thing, yesterday, this I expect a strong push back up to respect after this zone to price point of interest to be respected. One, I didn't get that, so I already have anticipation that we might start looking into a rebalance into lower before continue higher. And then this is when I took a look after the market. So from here to here at the bottom, we got a volume this is not a P shape. This is more of a balance. It just means that based on the volume profile is telling us that we have reached this zone, even though this has been moving forward back a lot. This is a balance zone. This is a balance zone. And then we can see there is a low volume nodes around this areas, right? And then as we always cover from our previous understanding about volume profile is whenever you go out of this zone here, which is the this is the point of control, and this is the higher point of control, and this is the average mean of the lower point of control. Once it move outside, the price always will want to move back towards the point of control, right? Which is what we see here. And then always move towards the low volume node, which it lines up here as I highlighted. Once this go to on Wednesday, so this is already in London hour and going to pre-market for Asia, this is where I see price started consolidating, okay? And I leveraged some of the volume profile PD array, so you can see there is a order block. So this is a 30 minutes order block I'm eyeing, and it is respecting. So I went down to 5 minutes. One thing I want to look for is when I move to the zone, I want to see if there's any low volume profile that the price will return back into here. So from here, look at volume profile to this low, and you can see this is low volume profile I'm looking at. That's a point of interest. So this is my point of interest, right? And something that add into the confluence, taking a PD array, the OTE over here at 61 percent retracement. Then I put my short entry at 61. So I literally top wick this, and then I just put my stop at the top here. So this is only 17 risk, and then my target was all the way down here for this low. I think this is the first low I target. We already 3R, and then this is the second low, which is close to 4, and then went all the way down here. Later on, retracing even further, so I can kind of play that out, but I didn't hold all the way to that. I left a lot of bread on the table, but let me kind of zoom fast into here. So you can see I left a lot of table. This was a total 15R trade, probably even lower if I remember correctly. Okay, no, just 15R. Yep, so this is roughly a 15R trade, but I only took it roughly 4R. So around here. This is my last partial order that got filled. So I left a lot of bread on the table, but the whole point is this kind of showcase you how I'm able to remove this slip here. How I'm able to pinpoint my limit order and just place it there, not randomly. Understanding the volume profile will give you another confluence and edge to see where the price will retrace to. But first, it's not just reading random, low volume nodes. This is a volume nodes, but the reason why this is not the one I choose is because this is within the point of control, right? This is the high, this is the low. Price typically will want to go outside of this, as you can view as this extreme. And once the view as extreme, you always want to pull back. And here we have a volume B profile, which is this is a seller profile. We want to go lower. So usually once the rebalance to volume profile fill these orders, it will go straight down. And as we can see, this is the 5 minutes. Even on the 2 minutes or 1 minute, you can see how aggressive a bunch of sellers just step in all through here, right? Just to fill this volume nodes, low volume nodes. Okay. Now jumping into a couple other examples, let's take a look. Okay. And here you can see this is a D profile. So what does the D profile means? It means this is a balance profile. Most of the case when you have a D-shaped profile, it means on this day we're gonna range between, and which we did, right? So on ranging day, what you want to look for, how you can leverage volume profile is you can look at the extreme. You usually have two volume low nodes on the outsides. So these will be your point of interest. Okay, so these will be your point of interest that you can leverage on these days that you want to look for trade. So for example, you can look for trade outside here, and then your stop will be outside this high. So you can put your shorts at the nodes here, stop at this high, and then target bottom, right? And we're just our target QR. Okay, and then same thing, vice versa. If you go long down here into the low here, and then just target above QR. So QR is roughly here. So you can, on the ranging day like this, you can kind of take a look on where the price want to sit. Most of the time when you have a balanced profile, it will just range, or it will range bound. It doesn't have a imbalance on the sell side or buy side. Okay, so hopefully this is kind of helpful, and you can add this to your arsenal for your trading confluence, and then help you kind of understand why price move the way it does. And as we mentioned before, volume profile give you just a picture. Sometimes instead of just looking at wicks and body of candles to tell a story, it's more accurate to also rely on volume, right? So volume, you cannot hide that. That is essentially public to all trader. You have the same information as institution. And those order are, institution buyer stepping in. If you're a large volume stepping in, you cannot hide those. So those are essentially more accurate when it compute, including with your RTPD arrays that you trade with, whether it's supply demand, smart money concept, ICT. Just adding a volume profile give you a picture, it paints a picture where the price is going and why the price moved from point A to point B. Okay. Hope this is helpful. And if you have any other questions, please leave it in the comments. And if you'd like to see any new trading strategy or concept you want me to go over, leave it in the comments. I'll do a separate video on those if I haven't done them. Otherwise, stay safe and happy trading.